Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. So during this Asian Session Live Market Analysis and the Forecast webinar today on 19th of May, I'll try to recollect what has happened during this particular week and whether the market has moved in line with that of the forecast. We will see. And also I'll explain to you what could happen during the rest of the day in this particular week. Today we are on Friday, so the players are under the pressure of diluting the positions, and if they hold extra positions, then they need to pay margin. So in order to avoid what the players do, they simply pump the market up and offload their positions and then allow the market to let loose and drop and buy back against their sell nominally so that they don't make any extra payment for that of the positions what they are holding. This is what happens every time. As I explained last Wednesday, that during my Tracking the Forex Market Together webinar, because Monday I could not present the webinar due to some technical reason, they are doing the middle level consolidation with either way stoppings. So during this middle level consolidation, what they do is from the lower level, they rise the market one way to that of the middle level and pretend as if they are going to continue the rise. So automatically the traders who have gone short will do the short covering and they hold high and induce the traders to take buy position. The traders have taken sell position, then they firm up further another 50 pips. So those who have taken the sell position will get afraid and close the sell and turn long, thinking that the market has pierced all the resistance and is got, and they act as support. So the market is expected to go further up. So they will try to recover the lost money by taking the long position so that they'll be able to close it with a profit. But what the players do, they just hold like this, like yesterday, how they have been holding high in the case of Euro and GBP, and which give the impression that it could pierce upward. And that is how, when they hold it for the whole day, the traders become jittery and start do the short covering. Similarly, in the case of USD, they came down to 110.22 and things like that, holding it for the whole day. And now it is around 111.41. So this is how they try to play a trick. Yesterday, in the case of GBP, they took it up to 1.3048 and then holding there for the predominant of the session as an extended move on the upside. Then during the US session, from mid-US session, they started making a quick drop. So this is what they do it as pump and dump move. So in the pump and dump move, they pump up, induce the fear to the other traders, and dump all their positions to the afraid traders. So those who are afraid of the market because of the margin fear and because of over trading have to necessarily go in for either margin call or cut loss the positions. Later on, they slowly drop the market now as they are done, and it will give that impression to the other traders that it could bounce back again. So they will try to buy on the dip. But what they will do, they simply hold here in the middle level and drop further towards the US session. So when they do it like this, when they drop during the US session, then the traders taken the long position here will liquidate out of fear being weakened. Then Monday, again, big beginning false move, they will try to do it. And that is the 4th week of the month. So they will again continue to make similar moves. They make Monday initially big beginning false move, followed by that firming up move, induce the traders to do the short covering. Those who have taken the sell after the drop they will induce them to do the short covering, and later on drop again to the lower level, and then they will try to accumulate huge buy positions. Then the following week is the monthly trend reversal time. So during this monthly trend reversal time, they will make whips or moves on either side, induce the long holders to liquidate, induce the short sellers to do the short covering, and also handle the derivative market. Then finally rise again during the month of June. So this is how they are expected to make the moves in the market. So the market is making the move in line with that of the forecast expectations. Now coming to that of the levels in which they have been making the swings, euro came down to 1.0923 as the low, and 1.1172 they reached as a high, currently holding around 1.1111, and they are expected to firm up a little bit during that of the European session, as I explained it in the forecast today. They will firm up now during the Japanese session and make a little bit rise again to pump, and then start dumping it. Then start dropping during the US session. Then in the case of GBP, they went up to 1.3048, and the low they set this week was 2868, and they're likely to breach this and go to 2080 area before making further rise next week. Then in the case of yen, they came down to 110.24 and quickly gained the level, and 113.84 was the high they are set. Then in the case of CHF, 97.65 was the low. Then they started rising it. They went up to 1.0019 briefly on Monday. Then in the case of Canadian dollar, slowly they are making the slide after consolidating around 1.37, 1.3770. They started dropping it, and now they are holding around at a 1.36, and then further downward move is expected next week. Then Australian dollar, 0.7386 was the low and 0.7467 was the high. They just made the consolidation in less than 100 pips because they want the commodity crosses to be handled. Afterwards, next week, they will try to gain more levels in the case of Australian dollar. So all along, you find that the market has moved in line with the other forecast and also moved in the range what is envisaged by the forecast. Now coming to the market reading, I noted down the initial lows and the highs in all the four majors and two commodity pairs. In the case of euro, 1.1097 is the low, 1.1115 is the high, and they are not breached the low or the high, simply holding in the middle level in such a narrow range. That means they want the traders' patience to be tested. Then GBP 1.2928 is the low, 1.2959 is the high, they are not breached the low or the high. Then yen 111.12 is the low, 111.61 is the high, they are not breached the low or the high. Then CHF 0.9791 is the low, and 0.9804 is the high, they are not breached the low or the high. Then Canadian dollar 1.3596 is the low, that they have breached it by 3 pips on the downside. Then the high is 1.3611, which is not breached. So they are holding below that of the initial low in the case of Canadian dollar. So they are trying to handle the commodity pairs and the commodity crosses to start with. Then in the case of Australian dollar, 0.7407 is the low and 0.7422 is the high. They just breached, went up to 29 and then holding around 22. Slowly, they are showing the USD weakening move in the case of USD CAD and Australian dollar. Then later on, you will find that Euro and GBP firming up a little bit during European session and start making the slide and drop during that of the US session to that of the lower level. So what they have done, They continuously gained the level quickly after accumulating huge buy positions during the lower level consolidation with frequent downward stop. Then after gaining all the way levels about 500, 600 pips above, they started holding and offloading the positions so that they made huge profit on that. Then subsequently, they build sell positions. After booking profit, they have to build a sell position before making the slide. So that's what they have done it, and the slide is envisaged by today, yesterday and today, and afterwards they will make Monday again a downward move, and the traders might go in for a sell and buy trade, then trap them and start rising again. So sell after the drop, buy after the rise, or detrimental trades. What is more important is when they gained the level and stop cutting the new high for 30 minutes, take a sell position. When they quickly drop and stop cutting the new low for 30 minutes, you book profit. That way you should do it. In the recommended trades for today, they could make a quick downward move. At that time, you can take a buy. When they make a quick upward stop and you can try to take a sell. The stop and will be just a firm up move for about 20-25 pips. At that time, you can just take the sell position. Then when they make the drop and breach the low and go below quickly in order to hit the stops, at the time buy back. Then similarly in the case of GBP, when they gain the further levels above that of the initial higher during the stop and take the sell position. And then when they make the downward move and breach the low and go below during the year session, book profit. That way you can do the trades. Now these are all the market timings for the day. So it is a 24 hours market. So you need to understand how they are handling each day, each session, and within the session, the early, mid, and the late sessions. These timings are valuable for you in order to understand the type of moves they are making in the market. If you simply follow the chart and try to read the type of moves, you will not be able to understand, because they play it in such a way that if you use 15 minutes chart or 5 minutes chart, it will look unwieldy. And if you use 30 minutes chart or 2 hours chart, 4 hours chart, then it will become very clumsy. You will not be able to recognize it, because those timings are our normal timings. But what is more important is the GMT time frame. And also in the GMT time frame, you have to find the naturally occurring the start and the end of each session, because locally the banks open around 9:30 a.m. and close around 2:33. So that is how they make the moves in order to accommodate the treasury handling of the banks. So you need to really understand that the market is manipulated. And if you don't understand how they are manipulating it, then you will continue to see the surprise. But once you have learned the art of reading their mind, then you laugh at them. Okay, you are rising now, let me take a sell. And wait, you are making a quick drop, let me cover my short. That way, you'll be able to do the trade at ease. So if you got any question, you can ask me the questions in the question answer window. FX Trade Forex live video window, you can ask the questions. I'll be willing to answer those questions. My contact details are given here in the event. If you want to contact me during the non-webinar time, then you can either contact me through email, dr@iknowindices.com, i-knowindices.com. Dash should be hyphen, not underscore. Then Skype chat iknowindices@hotmail.com. You can just contact me. I'll accept your contact, and then you can ask me through chat the questions. If it is very urgent, you can give a call to my numbers. But otherwise, you can contact me through email. I'll be able to help you. And there is nothing like urgent in the market, because once you become highly impulsive or afraid of the market, only then it becomes urgent. Otherwise, you can easily handle the market if you avoided over trading. There is a question from Bren. Do you even find the problem of lack of volume in the case of the crosses as you have in the majors, or it is not possible due to the majors controlling? Now, as far as the overall volume in the market is concerned, which has dwindled, that is why you find it takes such a prolonged time for consolidation. Because I remember about 10 years back or 15 years back, they used to do this sort of shift in trading zone in a matter of 2 months. Every 2 months, we'll come across shift in trading zone. Now they are taking 2 years to do this. You can understand how they find it difficult to earn money from the market. When there is a need for a shift in trading zone, when the participation is more from that of the traders. When the traders' participation is very less, there is no point in doing shift in trading zone, because the traders are not there. Nobody is going to be trapped. Only when the traders take more positions and then they trade without a stop, then if they make shift in trading zone, then the margin call can be applied. If the traders are not there, where is the question of making shift in trading zone? That is why you find that it appears like a prolonged consolidation. When it happens to be a prolonged consolidation in majors, then automatically the crosses will also be range bound. There is no other goal. Because when they are making majors as range bound because of lack of volume, even though the volume might be equal or more or less, still they will not be able to handle the crosses in a big way. So majors influences the crosses. There is no doubt about it. It is not controlling, influences the crosses. Because there are crosses wherein the traders' participation is very less. And there are other crosses wherein the participation is more. Wherever the participation is more from that of the traders, like Euro GBP, then they make one-sided extended move, or 200, 250 pips. And also the pip value is very high, so they are able to earn very nicely. That is why you found that for the past week, they have been holding GBP, continuously rising Euro. Thereby Euro GBP gained nearly about 150 pips. And the pip value is 2 times. So you can understand it is equal to 300 pips rise. Hope I answered your question. Any other question, please? So if there is any question, kindly ask me. This is the forecast sheet. So when they rise during the European session, you try to take sell position, because they want the short sellers to do the short covering. Afterwards, they will just drop. Because there are so many traders who have taken the lowest level sells. So when Euro and GBP started making the slide, they will think that the market will come to their level to close it without any loss. So they will calmly wait. Then again, the players gain the level, trigger the fear for them. Then automatically they run and go and close the position. Then later on they drop. During the US session, lighten their position, because only players are capable of doing the high level buys. No trader having a logistic mind will buy in the market after the rise. Yeah, they will think that when it has become expensive, it is a level to sell and not to buy. But what the players do, they hold like this, consolidate. But the trader assumes that the market does not have the strength to go up, so he takes the sell. Then afterwards, silently towards close of the session, they gain the level and induce the short sellers to do the short covering. So always keep in mind that during this sort of shift in trading zone, or any time for that matter, whenever they make a quick upward move, once they stop cutting the new high for 30 minutes, then take the sell, or similarly a quick drop and stop cutting the new low or intermediary low for more than 30 minutes, buy back. You will find the real trading happens for you. So quick moves or false move. So do the contra trade during such quick moves. Then you will be really benefited. You need not wait with the positions. Wait for a long time to close the position. You'll be able to close the positions quickly. If there is no question, then I'll try to wind up the webinar. Not breaching the low and the high in the case of majors indicate that it is low volume. On Friday, people avoid committing positions because they will be squeezed. So automatically the players have to squeeze only the existing traders holding unfavorable positions. Okay, let me conclude the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Monday and give you the forecast for the next week. Keep in mind quick moves or false moves in the market and make use of it for your quick trade and smart trade. Wish you all the best in your trades and wish you all happy weekend. See you on Monday.